2022 was marked by stock market turbulence around the globe, not only for entire North American stock market, but also for this stock. Yes, you guessed it right. I'm talking about Tesla stock, a stock that has seen greater returns in last 3 years from 2020 to 2022. The stock has seen a greater returns. Greater return is an humble statement for the stock, which went more than 1000%. Yes, 1000% up. Until recently, it has been declined like never before. It is down like 69% since last year. Lot of investors are now unsure what is happening with the stock and are wondering, is it a good time to enter into the stock and take a position? So, in this video, I'm going to analyze Tesla stock for you guys from fundamental, technical, and any near-term headwinds surrounding this stock, provide my view, including buy and sell suggestions. So please stay tuned till the end of this video. According to me, I believe Tesla is an engineering and technology company who are into making cutting edge technology for automotive, energy generation storage business, who are also into artificial intelligence. This is a very key differentiator for them compared to other automotive firms. And finally, they are also into expanding their supercharger and connectivity across the globe. First thing is the fundamental analysis. So this is the Q3 financial report from Tesla. And here I'm looking for following metrics. So I want to see the revenue to increase year over year. You can clearly see that automotive revenue have increased to 55% compared to Q3 2021, which is a good sign for as an investor. So I would say really great Tesla. You can see total revenue has increased to 56%, of which you can see 55, which is clearly automotive. So basically just 1% is energy business, right? So overall revenue, this metrics is compliant for Tesla, right? Now, the second thing I want to see is operating expenses should decrease, because more the expense that you can keep down, more profitable you are, right? So you can clearly see operating expenses have increased this quarter compared to Q3 2021, but you can see since Q4 2021 it's in the decreasing trend line. So even though I'm not happy for this quarter in terms of the operating expenses, but I can see clearly that the trend is in decreasing trend, so which is a good thing for Tesla. So the next thing I'm looking for is operating margin. Again, I want to see this to increase. So more margin I have, I will be more profitable. So you can see operating margin has been increasing to 262 basis point compared to Q3 2021, so which is excellent for Tesla. The next thing I'm looking for is net income to increase year over year, because that's what is attributed to shareholder like you and me. So which again you can see here, it's been increasing like 103% compared to Q3 2021, which is excellent sign. And then free cash flow is, you want to see it to be increasing year over year. So you can see free cash flow is increased to 148%, which is another good sign. And finally, you want to see the debt level are not high, right? So which you can verify from Q3 SEC filing from Tesla, where you can see that their assets are 3 times more than their liabilities. That means they can easily service their liabilities, right? So as a business, you also want to understand how well they are in producing their products and how well they are delivering, because these are the key metrics which would directly impact their the top and bottom line, right? So the first thing as a key metrics I want to see is how well they are delivering. And I want to see the delivery, specifically automotive delivery, because that's the 95%, almost 99% of their revenue to increase year over year. You can see the total deliveries have increased for Model 3 and all the models nicely to 42%, which is awesome, right? And then you want to see the inventory should be high enough so that they can service their demand. So you can see the global vehicle inventory is nice. They have eight days worth of supply, which is 33%, which is awesome. So according to me, the first headwind is Elon himself. Let's face it, he's managing 3 companies, and most of the shareholders, they feel that Tesla shareholder feels that he's currently distracted with this Twitter saga. They are not confident that Tesla can execute in his absence. The next thing is communication issue. Some communication issue. He recently said that Tesla would be able to achieve 50% delivery target for 2022, but the deliveries came only by 40%, which is a big miss. Short-term headwinds that Elon has to manage. So when you think about 2016 or 2012, Tesla was the only electrical manufacturer and people were skeptical around the world, right? So now, fast forward to 2022, things are not the same. Every auto manufacturers have caught up. Yes, Tesla has a cut edge in terms of they have already captured the market. They have big fan following. Their technology is cutting edge now, but in terms of affordability, not everyone can afford their cars. Let's face it, right? So therefore, the competition is going to catch up. So you can see this is Han EV. It's a Chinese EV manufacturer, BYD. And as you can see in this graph, since they just entered into EV business like in late 2020, and then you can see in 2022, they've already caught up or even surpassed Tesla in terms of sales. So you can see how the competition is stacking up against Tesla in China, not only in China, but also in around the world, right? You have General Motors in North America, all the Europe in Europe, like, BMW, Chrysler, Audi, they're all having their electrical vehicles and they are kind of fighting for their share. So that's a big headwind for Tesla. And Tesla recently in December, they cut the prices in China due to weaker demand. They also cut the prices in other parts of the world like Singapore, Korea, etc. So which is something interesting. Like, why would they cut the price? They cut the price because due to the competition, they want to, and also want to, due to the weak demand, people are not buying the car. So now that is something very, very big thing for Tesla, because Tesla's 1/3 of the sales comes from China. So if they cannot manage this, it will be a big thing. Tesla would be in a big trouble. And the Tesla sales in China was low in December 2022. So I would wait for Jan 25th Q4 call to see how the sales in China panned out, to see, because this is something big for Tesla. We need to see how this is going to work. And it was the biggest decline in Tesla's history. It declined like 42%. The sales declined by 42%. Also, not to mention, they also had, in China, there is a COVID outbreak still, which is causing the Shanghai factory to shut down. That's going to affect their production and delivery. So because China factory is essentially not only delivering producing the car for the local market, but also for Europe, right, and the neighboring countries. So which is something big thing. So I believe competition, the sales down in China and the COVID outbreak in China are biggest headwind. It's going to have a bigger impact on Tesla's not only market share, but also the pricing and their profitability going forward. Highlight the fact that Tesla is not the world conqueror in terms of EV market share. So in North America, yes, they have a share of 70.6%. This is as of 2021, but plus or minus, they would be similar or even lesser in 2022. We will get to that. In Australia, they have 65.8%. In Europe, you can see they are paltry 13.2%. In Asia, they are 12.4%. And South America, 3.3%, where you have other car manufacturers who has the leading market share. And I talked about General Motors earlier. So you can clearly see General Motors have caught up in EV market. Their market share is like their sales went up like quadrupled, 28,000 to 500,000, which is tremendous. So that's going to be a headwind for them in North America, and I believe everywhere they will see stiff competition. That's going to decrease their market share, which means their revenue would come down unless they catch up on other part of their business segment. It's going to be very, very difficult. So finally, you can see this is a very interesting graph. I want to bring it to your investor attention that, like, Toyota, Volkswagen, Chrysler are the biggest car manufacturer, traditional car manufacturers. So you can see their market capitalization, in hundreds to 500, like total every three of them put together, it's 500 billion. Whereas electrical car manufacturers, you have Tesla, Rivian, Lucid. You see Tesla by itself has 1,059 billion market capitalization, which is like twice the market capitalization of traditional car manufacturers. This is unbelievable, because if you think about their delivery of the car, they only deliver 0.5 million. This is as of 2021. So now they produce 1.3 million in 2022, but still market capitalization of 1,059 billion versus 260 billion for Toyota doesn't really make sense. To be fair, as we saw in their revenue, Tesla's revenue, major portion comes from auto, right? So it is good to compare with the traditional car manufacturer and for valuation purpose. So I feel the valuation, even though it came down, the stock came down 69%, it's still not low enough for one to go and buy it. And finally, the S&P has forecasted and have done a further analysis on Tesla's market share on North America, specifically US, and they have predicted that by 2025 it will come down to 20%. Right now they are in around 65% like in 2022, but now they are saying by 2025 it will be 20%. So which is guys, this is something you have to really think about. If that has to happen, their market share is going to decline. That means they cannot make that revenue, and this valuation already it's really high. Imagine if they keep dropping every quarter, the share price is going to tank. So I would be cautious here in terms of headwinds, so which pose a big challenge to Tesla, and we want to see at least Q4 2022 what they have executed. Okay, I want to conclude with a technical analysis. So this is a Tesla 1 year daily chart. As you can see, since October last year, 2022, it's in downtrend. But I want to highlight something very important fact. So in somewhere around August to October, the chart made actually a triple top bearish pattern, which is a bearish reversal pattern. So basically, the market was going up. You can see that there's an uptrend, and it made triple top 1, 2, 3, and then in later part of October, it broke that triple top neckline and since then it's been declining like never before. And you can see further in November it declined even further, and then and around like later part of December, you can see it even broke that downtrend further. It fell from 140 to close to 100ish, and it is right now in oversold pattern as indicated by RSI pattern, which is like whenever it's in like 20-30 level, it's a like oversold pattern. But and then but you can see that MCD was not converging quite a long time. So until recently in early part of January, so Jan 6th, it started converging. So I do see for short term the price to rebound from this low hundreds to anywhere 125-ish, and it will be range bound there, because you can see there is a clearly bullish harami pattern. This is a Japanese candlestick pattern. You can see it's engulfed, like the bearish candle is engulfed by a child, and you can see the volume is high. The child's volume is high, so which is clearly indicating there would be a reversal in pattern since Jan 6th. So I would see the market to go up high close to 125, but it will be range bound. So it will be anywhere between 100 to 125, and it will range bound. It is waiting for the confirmation. So this Jan 25th call is going to be crucial, where the market will confirm whether to go down or perhaps it may go sideways. So to summarize, Tesla is executing well in their business, as you can see by the strong financial statements, as well as they meeting their production and delivery targets. They are mostly in line. However, I feel there is a strong headwinds going forward for Tesla in terms of stiff competition around the world in the EV market, unless they compensate in the other segments of the business, right? And then followed by slower and weaker sales in China, which coupled with the COVID outbreak, which may affect their production, which can bother their top and bottom line. Now, some of these headwinds are already factored into the stock price, which you can see it has come down 69%. Now, I still see for the short term, the price may go range bound between 100 to 125, but I still feel there is a chance that the stock price may come down further. Now, the valuation is not still cheap enough. Please keep in mind. Therefore, I would watch the stock for another couple of quarters before entering my full position into it. I will start nibbling a little bit, as the price comes down, but I wouldn't go full-fledged now. So thanks a lot for watching. Happy investing.